Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
All right, welcome everybody. A late start on Saturday morning. Technical difficulties from your knucklehead extraordinaire. Maybe not today. My name is Steve Vetterl. Today is the 30th of January, the month, and unfortunately, year's flying by quick. Let's do a quick check, please. Chat window only. If we can see my screen, you guys can hear me okay. You can see my ugly face on the cam. We will get started. So, a crazy week, and it had nothing to do with the foreign exchange markets. So we'll talk a little bit about that if you guys want to stick around. I know a lot of people have a lot going on this weekend with launch and kickoff events with Auvoria Prime. I get it. It's probably let me get my chair straightened out here. It's probably going to take up a chunk of the day for a lot of builders out there, so I'll just be real brief and succinct and to the point. We had a lot of craziness going on with equity related to a couple of things I'm going to talk about. If you guys want some feedback essentially on GameStop and what went on as far as Robinhood and a couple of the other brokerage firms with the online-only model, stick around towards the end. I'll elaborate a little bit on that. So welcome again, everyone. This is the weekend forecast for the upcoming trade week webinar. If you're joining us late, looks like we've had a lot of people just join us. So I throw the disclaimer out, which is an automated video in the beginning. You can always see these on the weekends. Our master of ceremonies and technology, Bill Wynn, will put these up once the recordings are up in the back office. Okay. Let me double check. Looks like we're okay on the mic. I've had some adjustments, and of course it's taken my slowness about 5 months to get the microphone and camera situation set up, so hopefully I'm looking good. Let's get started. By the way, for those of you not attending any of these big events this weekend and coming up obviously in the next few months and quarters, it's got some fantastic speakers, so if you guys haven't already been taking part in it, it's really good stuff. So coming up, this is the week of the 31st. Let's take a look at the calendar here. Last day of the month is tomorrow. We have obviously coming into the month, so essentially the 31st through the 6th. Always make sure to change that. If you're not currently looking at that, forexfactory.com is the place to be. I filter out all of the yellow and orange and only really care about red folder events. Why? Because they carry the highest amount of percentage change and or risk related to currency markets. So for Monday, as an example, February 1st, we have ISM, which is a pretty decent event. Should be interesting to see what that number turns out to be as far as manufacturing. Got statements from the RBA, and for those trading the Aussie, and some employment rates, which is the big one for any of those folks trading NZD, which I'm not a fan of. We literally have a currency event for almost everything except for the euro next week. But a lot of big stuff on Thursday related to GBP. I mean, this is actually one of the bigger days in this quarter for the pound. If you're trading it or any of the currencies in, just keep in mind these times are Pacific time that you're looking at. So you can always change the times and zones up here for your area. CAD events on Friday. And then obviously the big unemployment rate, which is the non-farm payrolls, is on Friday in the US. Okay, so this is a whole week. There's a lot of stuff going on. There is a couple of other potential risk issues that I'll bring up, albeit I don't really think many of them in terms of the herd, if you will, are going to migrate over to Forex. If in fact they do decide to do that, it is going to bring a brand new risk measure into the Forex markets. I'll talk a little bit about that. So feel free to post your questions, Q&A window only, which is now open. I will go through some of the different currencies analysis. It's going to be a faster move today because I know a lot of people got a lot of stuff going on, so I just want to get right to this. Okay, S&P 500 had a fairly decent correction for those trading equities or anything there. Just be aware of what's going on since the move's been a tremendous move up. We're starting to see a little bit of pullbacks related to that. Okay, the VIX. Okay, volatility index, you're looking at a daily chart. It's begun to spike a little bit, show its ugly head. We haven't really seen this since the US elections in the beginning of November. Okay, keep in mind, this is really an issue when this index gets above 50 and gets into nosebleed land, which is up obviously closer to 70 and just historical volatility. Just understand that. Taking a look at the US dollar. Still stuck within the range we've been talking about for a long time. Okay, let's see if I can spread this out a little bit. Acting exceptionally well within our support and resistance levels. For those of you not familiar with this, these are these squeeze zones that have been developed by Dasan, the developer. Okay, so not much to say. We've talked a lot about this. If you're not familiar with what these candlestick analysis part of our technical talk is, you can go to my Telegram channel. Link to that is posted in the back office, and you can follow along with some of the technical analysis that I have posted in there. As far as starting to learn at least the big picture, which I highly recommend for everybody. On to the Euro-US dollar. Again, acting very well within our daily chart here. Let's just reset this. You can see we've, obviously with the drop of the dollar all year, it's corresponded to a rise in other currencies, primarily ones we want to focus on: Euro USD, GBP USD. Again, this looks like this thing just wants to burst out. But the problem with this is that notice DXY has lifted towards this resistance point just under 91 area. But surprisingly enough, in GBP land, looks like it wants to break above it. Maybe not necessarily is requiring as much of the breakdown in DXY to break above that. Could have been an anomaly. I could be wrong. We could come up against this a bunch of times and just drop back down to the lower part of the range. That would require probably a fairly significant rally, obviously, in the US dollar to go along with that. GBP JPY. Notice this is the first time we have poked our head on a daily chart, which took place on Friday, above a pretty decent, and came right back down underneath it. So for those of you that may not have faith, as my mom always used to say, ye of little faith, okay, in the power of support and resistance, this is another great example. Notice it finished right underneath it. So we want to pay keen attention to this, as this break of this could potentially lead to a pretty big run, although I still think you're going to have to see some DXY moves that are really going to precipitate some of this as a precursor. So just keep that in mind. NZD CAD. Let's see why on earth that is in your trading mantra is beyond me, but I will take a look at it. Watch list error. See that? That's crazy. You're getting a lot of watch list errors. Must be a lot of people joining this platform. Now it's asking me to log in. What's up with that? Let's log in again. Let's see if that worked. First, let's give it a shot again. Third time's a charm, and it is. All right. Maybe I should put this one in the list. I just don't like NZD based stuff, but here we go. Still really holding within the overall support and resistance zone. It's been a bit erratic, but it's holding the area right under 92, right? So I think that the problem with a lot of these crosses and a lot of these more exotic pairs is that there's so many other things you have to look at and analyze first before you even get to this pair, right? So you really got to analyze CAD's moves in relation to US dollar, in relation to the Aussie, obviously, and then you can move to third piece of analysis, the NZD. So that's why it makes it a tougher, that's sort of a murkier analysis because you've got to go through a couple others in the front. Let's take a look at AUD NZD. We're gonna have this one in the list here. So let's add it. It's so easy to add. Okay, so dollar, Australian dollar, New Zealand dollar here. We've seen this. Let's take a look at the weekly on this first. Reset price. To me, like it's probably headed to the 1.05 area. Take a look at a monthly real quick. You could see the broader zones on a monthly chart. I would say very, very solid support just under, I should say just above par, basically a penny above par area. It's pretty solid support area. So we probably want to visit that maybe before the end of the quarter would be my assumption. Looking back at the daily, pretty big move, but we're outside of arguably, which is a brand new forming squeeze zone here, which is really not that big. It's only 3 candles wide, as you can see. Not really put a lot of credence in something like that. Looks to me more like support down around. Actually, kind of a murky analysis on this thing. Can't really give you some direction. All right. So let's take a look at a couple of questions. Hi, Steve. Thanks for these calls. Love them. You're welcome. I was wondering if it's possible to ask for other EA developers to post their weekly updates with my FX book for us to follow as Dasan does with this variable. So I guess the question is, and I'll tell you, I actually like that idea. I'm always probably from just because it's a risk-based measure. I'm always of the opinion that really the developer should have multiple live accounts running with different settings, as I have suggested to Dasan, a lot of times, which he has done, right? I don't know. I have access to the Gearbox MyFX books, but the problem is Tyler has hooked up Gearbox to so many FX books. I've lost track of them, honestly. He has them exceptionally well labeled. So what I would ask is that, and I can send a message to him on Telegram if you guys genuinely want me to do this, but I would think that he probably hasn't shown a lot of the FX, and quite frankly, they're doing very well because I think we're all probably looking for like the ultimate smooth out in Gearbox, right? And then we can have completely unbiased data as to what's going on. Now, that's my assessment. I could be wrong. I'm not the developer of it. I'm not Tyler. He's a great guy. He's exceptionally responsive to anytime I have a question for him. Love working with the guy. But there's so many variations in Gearbox with ghost trades and no ghost trades. And it's hard for me to keep track. And that's honestly why I think it is this is a great example, actually, why it is critical to tune into those guys' videos each week, right? So, that should be an absolute must. You can always watch these videos driving around in your car if you set everything up on your phone correctly. Just pay more attention to the road than the screen. But that's what I do, man. I watch a lot of videos when I'm driving around. I get a big 10-inch screen inside the car that I've set up to watch videos, but probably not the wisest move from a safety standpoint, but it allows me to get a lot of view time finish while I'm sitting in traffic here in the Los Angeles area, which sucks. We actually like the fact that COVID's been kind of a shutdown because traffic hasn't been as bad. But now that the restrictions have been lifted by Governor Nutcase, I think the traffic's going to get bad again. In any case, neither here nor there, but I will make the recommendation to all developers, which I know, if I'm not mistaken, that Josh and all the management team have echoed to the developers they want verified MyFX books running on live accounts. So be it. I'll get mine hooked up too. One of these damn days. All right, so Tom asks, when you look at KXY, what is it relative to? Can you elaborate on that, Tom, please? I'm not sure what you mean. Just give me a little detail so I don't have to try to figure out what the hieroglyphics are on that one. NAS 100, David, I'm pretty sure we're due for a big old rollover in that thing. So just keep a close eye on it. I mean, the run up in this tech-heavy index has just been absolutely monstrous. So it shouldn't be surprised that we'd have some sort of a pullback. Question is, will it turn into a bear market? I'm not sure. Courtney asks a really good question. I can tell you, Courtney, the crowd, if you guys are looking, I'm actually a member of Wall Street Bets. If you're not familiar with this group, this is the 6.9 million degenerates that we all are, that have made it a point to go out and torture large hedge funds that are short equities. I know they've been targeting silver. I haven't seen anything organized come up, but just keep in mind that this particular group here, of which I try and monitor this closely, just because I own some of these equities these guys are going after, which is a good thing because they're just essentially trying to terrorize big short position hedge funds. This presents a brand new risk to trading. And I'll talk more about this in coming weeks, but the growing size of this group is anything like I've never seen this before. So, and a lot of people have said that. So it's no sort of generic, really good insight by myself. It's just that, this is a brand new risk to different components of investment markets. So I'll have to see if, God forbid these guys ever decide to take on a couple of currencies, right? Because it could just turn into absolute mayhem with a lot of these brokers. So, and that's why it is absolutely critical to be with an exceptionally well-capitalized broker that doesn't pull the shit that Robinhood did last week, which will probably wind up killing that company. Just as a side note. I'll talk a little more about this going forward and some of the risks, but silver and gold are great places as a store of true value. Don't put all your money in it, obviously, when markets are acting very volatile or very, looking sort of bubblicious, as I've been talking about equities over the last 3 months. They're a great place to sort of rest some capital in a devaluing U.S. dollar environment. So I'll just say that. I will make the recommendation to the developers. Euro GBP, I think I skipped past that. Let me jump back in here and do that real quick. There's Euro GBP analysis, daily chart first. Notice we've broken and we've really haven't done anything once we've broken below the support line right under the 88, almost 80 area. And, really haven't done anything. And I think a lot of this is just the quieter nature, which is a good thing from a risk management standpoint, the quieter nature of the equity market, of the currency markets. There's been other attention shifted primarily to the U.S. equity markets and or what's going on with changeover in administrations and new potential policy coming out of our favorite group of knuckleheads in D.C. But looking at a longer term chart on this in terms of the weekly, It's pretty solid support here, I'll tell you. The next level of support is way down there, almost 86, I would say would be our next point we'd potentially travel to. Right? 86. Would be my assumption. When you look at a pair, they are relative. When you look at just KXY, what are you comparing it to? Is the basic value of the dollar. Are you talking about the DXY, Tom? Because you keep typing in KXY. Talking about the DXY right here? This is what you're looking at? Okay. Yeah, the DXY. Sorry. Maybe it's too early for me. I ran out of coffee this morning. So I'm living on water this morning. Need my coffee. So the movement of the US dollar as measured by the DXY is, and you notice there's no volume on this thing, okay? So it's just an index that moves based upon a whole bunch of other factors that take me an hour to explain if you want. You can just Google DXY components or DXY pricing if you want to learn about how the pricing model works. But you want to take a look at this in the standpoint of this as an index, and then use that as a precursor to the currencies. And another great example of sort of looking at correlations, and I don't show this enough, I probably should show it more. This is FinViz, which you guys may have seen. I used to use a lot back in the old days, which was like a year ago. This is actually really good. So you can compare all currencies to each other. And obviously, a lot of these have no correlation to each other, but I actually want to see from the daily chart, which is what we're looking. This may not be the easiest to see, but I want to look from a daily chart to see what's going on in relation to, the majors, obviously, here. And then what I like to call the tertiary or pin action based currencies and the movements of them. So you can look at them on a weekly chart, daily, obviously, but I like sort of being able to see all these. We could set all these up, obviously, in these individual charts on TradingView as well. But I like just a quick hit, don't need any analysis. Look to see, obviously, dollar's been declining, right? Anything in relation to almost every currency, right? No surprise. So if you know that's been the case, yes, we've been holding out in a tight range down here at this point. We haven't really broken one way or the other. We've been acting quite well as far as just looking at the daily chart in the U.S. Or the euro U.S. dollar here, primary currency. Yeah, now one thing, yeah, FinViz is good. It's okay, so good. You understand that. All right. So yeah, I mean, just is the basic value of the dollar. Euro GBP. Yeah, I don't know if you saw that. I already did that. Let's take a quick look at here. CHF I have that here. They're getting all exotic on me today. Put it in. Swissy yen. So notice we poked above. Ooh, yeah, look at this. Let's drag this down a little bit. Let's take a look at the weekly. Notice if we're coming up into areas where we haven't seen in quite some time since September of 18. We have a really decent support line here on the weekly. It should, could be wrong, but it should pull back. Should pull back against us like it's already doing. Look at a weekly candle here. I know these are kind of hard to see, but we pulled back from this point. Take a look at the monthly. This is a little better illustrated, maybe a bit easier to see how important this 117.50 level is. See this here? Let's see if we can illustrate this better. Been stuck towards the top of this range, and notice the last 5 times, which was last week as well, obviously, but essentially we're on the 6th time that we've come up against the 1750 area. And more than likely, not necessarily as much on a daily, but certainly on a weekly chart, if we can actually hold above this area, probably going to move much more. But it's going to take movements in other currencies first, primarily probably some of yen's relationships with both the euro and US dollar first as an analysis point. And then the same thing to be said with the franc in relation to the US dollar. So essentially you've got 4 pairs to analyze first before you get to this one, and have some ideas on this. But again, with a lot of these movements, it's really going to take something to break us out at this point. You know, we've had somewhat of a quiet period, I guess, in relation to the stormness of COVID and central banks easing and all kinds of stuff. So USDJPY, let's take a quick look. Getting a couple people asking for this. Now, this is the monthly chart. Okay, so just note that we're at a big point, obviously, in support. No surprise, US dollar has been weak, but just understand sort of where we are in the longer term picture, right around the 102, 102.50-ish area. Pretty big support. If you take a look on the weekly, okay, same thing. We drop down to daily. Let me reset. Go ahead. We come back off. Let me just drop back to here. So we have 2 things sort of playing out on the daily chart here, USD/JPY, is that we're coming up against, which arguably should be a trend line. That's we're touching against the trend line here. Let's see if we can extend this. I don't think this is the best draw, but let me just. It's not the best draw. Yeah, so we poked above the trend line and bounced off of pretty big support point right at 103. Let me see how that correlates to the weekly here. Usually when you see an inverted head and shoulders that I'm seeing here on the daily chart, means that we're probably, this is probably pretty darn near the neckline as well. I would say that on the daily, if we can get above this area and hold, I still think we got to have other stuff going on with the dollar first, but we very much could see this next part of a movement all the way to the 105.50 area would be my assumption. Then who knows? Maybe this is a little bit of a precursor to a potential break higher in the dollar versus other currencies. Maybe we get a whiff that it takes place in this currency pair first. You know, sometimes it's a leader, you know, hasn't been recently. It's actually a good question. I'm glad you brought that up. I'm going to put this one on alert. So I get questions like this next one from Moku. Love the name, dude. It's great. Do you use the COT report for your weekly forecast? I do not in Forex. I do trading other stuff. Okay. That along with the Edgar database 10K filings for some of the biggest institutions of what they're holding along and short. And then the question related to NASDAQ, which is this IXIC index here. If you guys aren't familiar, this is the index that's been on an absolute tear since the pandemic bottom, which was essentially towards the end of March of 20. This thing has almost doubled, a little bit more than double, just double, not quite double. So we're due for a correction here. I just would not be long big tech way up here. I would just want to see a pretty decent correction, right? Somewhere in about this 12,000 area, which is a pretty big drop, obviously, but would not surprise me at all to see that, especially if this craziness with Robinhood and all these Wall Street bet. I guess I'm one of the degenerates now because I belong. There was only 4 million people in this group just a week ago. It's crazy. So you really got to pay attention now, and you can always just refresh it to see what's going on as far as this. And never knew that this would play a part in anything. So it's crazy. But so it looks like here, let me just go into this since we're sort of finished with the Forex analysis. Just delete these. So a little GameStop Robinhood perspective. So there was a number of hedge funds that got the GameStop trade wrong on a risk reward basis. And, I sort of know the feeling here, and it attracted interest of smart retail investors, hence the Wall Street Bets group here. So they spread the word via social media, this platform and other platforms, Twitter, so forth. The affected hedge funds essentially were run over, but a few noticed that other big hedge funds actually made a bunch of money. So they were following on the coattails of this Wall Street Bets. And interestingly enough, one of the funds in there is one of the ones I do a lot of business with, Dimensional Fund Advisors, the guys that have most of the Nobel Prizes in terms of active portfolio managers, some of the best in the world. But they can only be bought through advisors like myself that have actually been through their university. So it's not an easy group to get on board with. But so as the stocks of GME and Nokia and a couple others went higher, retail investors, began to believe essentially that hedge funds that were short could never cover, because the short interest was, in some of these cases, 140% of the shares outstanding. So yet the stock was trading more than 100% of its shares outstanding every day. So in a lot of that, in case it without getting into a lot of long interest, but from a risk standpoint, it makes it difficult to unwind the position, essentially buy back to cover, right? So as the story continued to circulate, GME stock went parabolic, and other stocks with a high short interest like Haas, also went up essentially in sympathy with GME. And many retail investors essentially began to buy these stocks on margin. And that the online brokers began having regulatory or clearinghouse capital issues most of last week. So it really isn't. And even though the chorus from the standpoint of the Capitol Hill and Elizabeth Warren, and who knows absolutely nothing about the market, she was embarrassing herself up there. But these brokerages began to essentially restrict the trading in these volatile stocks per customer agreements, so as to not violate their regulatory or capital limits, and essentially all hell broke loose. So, a lot of retail investors were outraged. They were not allowed to buy more of a stock, especially since something like a GME was up like 20-fold over the past 3 months. And that somehow was like a negative to Wall Street elites. Were preventing them from profiting even much more, so as to protect the hedge fund industry, which a lot of people think, they're all in bed with the regulators and or all the lobbyists on the street. They, to a certain degree, that's kind of true, but what they were essentially were not preventing them from profiting even more so as to just protect many of them who were long. So, if I've kind of lost it, I apologize, but essentially, as a result, politicians joined the fray. They decried regulatory, that would normally defend this. So, aggravated investors and class action suits came up, and so forth. But what I think a lot of people have lost sight to is as a regulatory system that did exactly what it should have done for a set of undercapitalized brokerages to prevent their collapse. and who knows, maybe they still will collapse just from, a lot of pissed off investors, but it was in an extreme set of market circumstances. So, I personally don't understand what all the outrage was about. I do think that FINRA and the SEC will look into Robinhood and a bunch of others now, and there may be more restrictions. But the fact that Robinhood and a few others that have this online only model do not clear through clearing firms, and their self clearing brings a lot of risk to how their model is that they operate in. And it may wind up blowing a couple of them up. And the lesson to be learned from this is what a lot of the American laws have been written down in different acts that have been passed over the last decade, and or some of the acts of 34, 35, and the Investment Company Act of 33 was put in place essentially to make sure that brokerage firms are capitalized, and that the smart ones out there, like the one I clear through TD Ameritrade, they have their own clearing organization, just like Fidelity does, which is National Financial Services. I don't understand what all the outrage is about. The shorts and hedge funds lost, retail won, and we all learned a lesson about the risks of no cost online brokerage model. But I've just been hard pressed to see why making a lot of money in heavily shorted stocks is a national crisis. So, yeah. Well, why was the GameStop short squeeze overhyped like it was? This wasn't the first time that this happened, right? It really isn't. I just think that the problem that most retail investors will complain about is that the online brokerages stopped them from trading. And they really only did it because of a capital requirement. A lot of the 13Fs, which are the filings that don't have to be submitted till about 45 days after the quarter are they're going to be looked at very heavily now. But I think the system worked fantastic. Now, whether or not Citadel is the owner of Robinhood is, and there's just a ton of stories out there. But I think the risk of all of this is that, one, don't put all your money in one stock. If you can't afford to lose money, do not trade with it, and the list goes on and on. So let me just peel through a couple questions real quick. Yeah, so I appreciate that. Thank you. We'll take a closer look. Any other questions and anything? How's the microphone sounding? How's the camera looking? I'm sort of still taking feedback on that. So I've gotten a few pieces of feedback on microphone placement. I may wind up, which I think I'm probably going to have to do. I think I may wind up just buying like a boom mic. The problem is I just haven't wanted to really mess with any of that because I'm actually replacing all of the furniture in this office. We're putting in hardwood floors. I'm making some changes to it. All this furniture is going out, and I'm buying 2 huge 49 curves for my trading system. So I figured I was just going to wait to get all that set up with a new tower that I'm getting and a bunch of other stuff. So I'm just revamping since the people that own my other office across the way in Temecula, they've sold the building and essentially blown up our whole office plans out. I think I'm just going to build a better office in my home since we're sort of getting screwed on the other side. So I'm open to any ideas or suggestions you guys have as far as making any changes to this, but stay tuned to all this. Anyway, it's about 46 after. I got to take off to a family event with my kids that I promised them. And I wish everybody a great trading week. Get involved in some of these online events, guys. There's some super stuff that's being organized by our leaders. Really good stuff. And, as you guys know, this oh, just as sort of me. I'm not a multi-level marketing builder. I just always am watching this from the outside perspective, and I'm an exceptionally difficult person to convince of something. I've been really impressed by this organization, guys. I got to tell you, and Chris and the team have really been stepping up to build one hell of a machine. So at some point down the road, we're going to have, bazillion pieces of software all perfectly ironed out. Be a great group to build a nice little structured, diversified portfolio with. And I'm certainly looking forward to it. But thank you, guys. Wish you the best of luck trading week. Make the trades be with you. We'll see you on the flip side.